What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be implemented when trading any company that's publicly traded in the U.S. stock market. Make sure you hit that like button if you enjoy the video. Many thanks to those who continue to tune in. If you are new to the channel, or if this is one of your first few times watching, make sure you hit that subscribe button and that notification bell as well. That way you're alerted when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos like we are doing tonight, they focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to swing trades and leaps. So if you want a deeper dive into how exactly we set up our charts, with the color coding for different time frames, different levels, broadening formations, things of that nature, check out the bonus section of our YouTube channel. That way you can get more information through those videos. You can also find more free information about this strat, which is the base of our trading and charting method in the description of this video. So while we do go over triggers and targets, I encourage you to watch the full video because we give some pretty good insight into price action on all time frames. So let's go ahead and look at the agenda for the day. We'll go ahead and recap the price action from today, Thursday, November 13th. And then we'll zoom out like we typically do and look at the week, month, quarter, and year price action. Then we'll zoom back in after we check the market maker's expected move for Friday, November 14th, and set our triggers and targets for Friday, November 14th, and do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so I'm just looking at today's intraday price action. It was a decent day to use puts, right? So we can see on the chart at the top, we have the previous low day. Obviously, we had a slight gap down. We have the green dash line, which is last month's 50% level. We have overnight low, which is this light blue level here, and towards the top of the page. And we've got the opening price, which is this dashed peach line here. If you're not familiar with this channel, one of the things that we look for at the beginning of the day on the shorter term time frames, more of a scalping perspective, we look for higher lows at or above opening print to get into calls, or we look for lower highs at or below opening print to get into puts. Right? There's some nuance that can go along with that, and the longer you use this method, day in and day out, you start to notice the different nuances. But for general purposes, higher lows at or above opening print are the first traded price of the day. You want to look to get into calls, and if we see lower highs at or below opening print, you want to look to get into puts. So first, we're looking at the 5-minute chart here, and we can see we opened and pushed down. Right now, once we got the push back up to lock this in as a low on today's time frame, we want to look at where that is in comparison to Wednesday's low, and obviously it's a lower low, right? So the fact that it's a lower low combined with the fact that we're under opening print, we're not looking to get into calls at that point, right? Although we did get a decent push down overnight, and you tend to think that price would correct back to the upside before pushing back down. This is all the upside correction that we got. So there's the bounce here, and then essentially a rejection off of the opening print, which basically lined up with last month's 50% level, right? And yes, from a 5-minute perspective, this is a higher low, but we want to make sure that we're, looking at multiple time frames at once, right? Even if you don't have a chart big enough to have multiple time frames. And for this video, I'm not going to put my multiple time frame charts up here because they'd be a little bit too hard to read for some people, because we have had, requests to keep the screens large for those who are viewing on the phones. But if we just switch through the time frames, right, we're looking here, we see we got the higher low, but then we see the rejection that we get here. If we just quickly flip to the 15-minute, we can see that the 15-minute, we're just getting a lower high, right? So here we are with what was the higher low on the 5-minute here, and then push up, but then the rejection here, that's a lower high. So yes, it's right at the opening print, so we went ahead and got into puts as soon as this was locked in as a lower high. So as soon as price went below the low of this candle, we went ahead and got puts. We got the soft lower high here, but because it's a 3 candle, you got to take that with a grain of salt, right? So we did not go ahead and move our stops to this level at that time. Again, we're protecting the calls that we have for December and January at this point, so we don't want to get out of our puts too early. And we waited for a solid lower high, so not a 3 candle, but an actual 2 up that is then followed by a 2 down, and then we moved our stops here. And we got the continued push down. Now you can see we've got a couple of Fibonacci levels here. This is the 61.8 of the October range. This is the 50, and this is the 38.2. We also have the 78.6 real dim here of the bull flag from the April lows. So you can see how it bounced within these levels, and there's a reason why we have these levels on the chart, right? We did not quite make it to the 38.2. So when we did start to see some of this, double 3 action and a little bit more chop within a consolidated range, we went ahead and moved our stops down. And once we popped up above this, it was towards the end of the day, but once we popped up above this lower high, so in this candle, we went ahead and let our puts go. Well, majority of our puts. We did leave some runners for tomorrow because of the the levels basically that we're at. We've been talking about them for a whole week now, and we'll see them a little bit clearer when we get into the higher time frame charts. But you can see how using that strategy, scalping strategy in the morning can roll into an all-day play, right? So it just depends on your your risk profile. Are you trying to cover some other position that you have? Things of that nature can help you to stay in those plays longer. If we also look at the 1 hour chart, right, we got a soft higher low here, so not a firm higher low, but after the soft higher low, we just continued to push down. So from a 1 hour perspective, right, here's the lower high here, so that we're already in a downtrend from the 1 hour perspective. So high, lower high, low, soft lower high, and then this could be a lower high as well. We closed at 39.22, and as we can see in after hours, we're down at 38.93. So if we do push down in the first 4 hour on Friday, this could end up being another lower high on the hour, right? From the 4 hour perspective, we also locked in a lower high is basically as soon as price opened, right? Let me actually pull up a little cleaner chart. Oops, not tomorrow, but today. If I can get the right chart. There we go. So if we look at the 4 hour chart here, we can see that, there we go. Remember we talked about yesterday how the second 4 hour of the day was an inside candle or a 1, so there was the opportunity for, regardless of whether we went down in the first 4 hour or up in the first 4 hour, the opportunity for a 1 2 down 2 up reversal or a 1 2 up 2 down reversal. Well, we got the 2 down, but it was a big 2 down candle. It wasn't anything like a hammer or even a failed 2 down where we closed green on the candle. It was a solid red candle down, so basically took the 1 2 up 2 down off the board. We've got the lower high here at this point, looking for the lower low on the 4 hour. So if you're looking at things from the 4 hour perspective, that would give you a little bit more confidence to stay in those puts as well, especially if you have puts from this lower high, set a couple of days ago at the beginning of the week, right? And we talked about at the beginning of the week that 50% level of the previous week is a great indicator of what, especially early on in the week, what may happen, right? So if early on in the week we're just opening up way past last week's 50%, or pressing last week's high, or even going above last week's high, and we're not really even focused on, price isn't even poking down towards the previous week's 50% level, then we usually have a trending week up. If we open, say, even high in the range and we push down towards that level, then we want to look at how we react. Do we get a quick bounce? If we get a quick bounce, then the rest of the week is generally an up week. But if we come down and we get chop action around the 50% level, especially that first day, which is basically what we got, then we're probably going to be hanging around that 50% level, which is what we did for 3 days this week. And then finally, falls out because we came back down, tested last month's 50% level and lost that as well. So you can see how things really drop out when you lose those levels of support, right? And that's the reason why we have those on the chart. So I want to continue to keep looking forward. Now, again, we said the 4 hour, we set a lower high. We did as well on the day, right? So as soon as price opened, we were already a 2 down on the day. So lower high, lower low, lower high. We did get a higher low, but now we're back to lower high, lower low, right? So downtrend still intact. Maybe flattening out a little bit more if we were to draw a, come on now, cancel that. If we were to draw a trend line, you can see how this downtrend was steeper than what this is turning out to be. So kind of flattening out. We could be starting to try and get that rotation back up to the upside, right? But as of right now, the most that we can say is we're flattening out, right? So that's how we looked for the day. Let's go ahead and zoom out a little bit more and look at the week. Right, let's look at the week, right? So now we're, starting to change our tone a little bit more, at least from the week perspective, right? We already knew how the 4 hour and the day and the 1 hour were in downtrends, but the week we, hoping that we were going to put in a higher low on the week, right? But now with the candle structure that we've got, we're down in that lower half of previous week's candle, really in the bottom quarter almost. And, real close to putting in another 2 down. So, do we need to do that in order to test last quarter's high as a support level? Possibly. But if you're a bull, you're obviously hoping that we can just push back up and finish inside candle because it's pretty much out of the picture that we're going to go 2 up on the week. But if we can finish inside, then we have the possibility of going 2 1 2 up reversal, or even if we do go 2 down next week, there's a possibility of a 1 2 down 2 up depending on how next week closes, right? If we push down, maybe even wick through the last quarter's high, last month's low, the quarter flip, to flip the quarter red, maybe flush out some stops there, and then push back up to make a hammer candle for the week. That could set up a nice 1 2 down 2 up to continue the uptrend. And again, that's going to be setting a higher low because we can come all the way down to 2350 before we're setting a lower low. All right. So from the week perspective, definitely much more neutral, but by no means bearish, right? We've got plenty of room to put in a lower high, and just looking to holds these specific levels here, like last quarter's high. If you're a bear, right, that would I'm sorry, a bull, that would keep things neutral to bullish. All right. Now from the month, we're getting a lot more pullback here. We're still an inside month. Let's get a cleaner chart here. Still an inside month, but again, now we're back towards the lower half of the candle, right? We crossed over the 50% level of this candle today to the downside. And so we're down in that area, but we're still right around that 50% level. So if we can find support off of that and start to push back up, even if we end the month as an inside candle or a 1, if we can hammer up or even get really close to making a 2 up and getting the month green, that would be great, right? And again, we're still not. It's nothing's breaking down from the month perspective, right? We do want to keep an eye on this though, because we are now in the bottom half of it, because if we do go 2 down on the month, that locks in that higher high, and now we have to start looking for that higher low, which again is around that 2350 level, to maintain that uptrend from the month perspective, right? So again, nothing really bad from the month perspective for all you bulls out there. Now for the quarter, right, we're getting this inverted hammer here, and that could be an ominous sign from a more longer term perspective, starting to turn the neutralize things, because right, we put in a lower low from the quarter perspective, right? Here was a low, we put in a lower low. Now we're pushing up, right? We triggered the 1, 2 down, combo 2 down, combo 2 up, right? We've got a magnitude of 70.08. All is good there. But if we finish this quarter as an inverted hammer and we go 2 down in the first quarter of 2026, that locks in a lower high after a lower low. And now we're starting to look at, okay, are we setting a downtrend from the quarter perspective, right? So, that we're still in this 1 combo 2 down, combo 2 up. We're above 36.15, but we're getting a lot closer to it, right? So we want to stay above that 36.15 to maintain that 70.08 target or magnitude for the move of the 1 combo 2 down, combo 2 up reversal, right? But we just want to continue to keep our eye on things. And from the year perspective, right, we talked about how we turned things around after going 1, 2 up, 2 down on the year, right? Setting a higher low and hammering back up. But you see, we're kind of losing some of that hammer now. We're getting a lot more wick on the top. This is starting to turn more doji-ish. So we want to continue to see this push up. Now, at the very least, we want to see it remain green. But we are getting close to going back to much more of a neutral to bearish stance on the year perspective. But again, we still got a full month and a half of trading to see where that ends up. We could be right back up towards the top of the candle by the end of the year and looking at the 2 down, 2 up for next year, right? And even if we do finish as a doji next year, we've got quite a ways to go before we go 2 down. We would have to see things turn, on that month and quarter before we start looking at that from the year perspective. So again, nothing just totally breaking down, but we are starting to neutralize a little bit on more of these time frames as we continue to put in the downtrend on the day chart, right? 4-hour and day chart. Let's go ahead and look at the market maker's expected move for tomorrow. And to do that, actually, let's pull up the other thing that I wanted to bring up about today, because I haven't talked about the internals a lot lately. I tried to simplify things a lot, but just how today was opposed to yesterday, right? If we look at this scalp chart, if we go back, if you'll bear with me for 1 minute, if we go back and look at today, you notice yesterday we bought was it yesterday or? Yeah, we did. We bought the nuanced call yesterday, right? Because we did push down from open and we made a higher low, but we also had the internals going in our favor as well. And let's see, do I have the internals? This is just today's. But basically, if you look at yesterday's, the internals were neutral to bullish, right, above the 0 lines when we had the initial bounce in the morning, right? But today, if you look, when we had this initial bounce in the morning, the tick, it was at the trend lower zone before it bounced up to the 0 line and then was rejected, right? We were already below the 0 line on vol QD and pushing down. 80 QD market breadth was already at the trend lower zone when we opened. So the internals were really, red and in the bear's favor when we opened this morning, which was another reason why we jumped into those puts today. So all of that stuff kind of adding up, right? But let's get back to what we were looking at before and the market maker's expected move. And again, to do that, let's take a look at the options chain. Here we go for SOXL. So if you look at, this is Thinkorswim. If we look at the options chain for Friday, November 15th, and we go over to the right, we see a plus or minus number in these parentheses. So we've got a plus or minus $2.85 essentially as the market maker's expected move. So if we go to our notes here, we can see, right, we closed on Thursday at 39.22. And the market maker's expected move is plus or minus $2.85. So that gives us a range that the market makers expect price to trade in on Friday of 42.07 to 36.37, right? So if we go back to the charts here, we can see we've got that marked out, right? Market makers expect to move low. And again, orange color coding is always for the day time frame. So this market makers expect to move low here in purple. That's the market makers expect to move low for the week. And so you can see how those are lining up pretty good. And here's the last week's low right here, this dash line, right, purple dash line. So not only are we in jeopardy of going 2 down if we reach that market makers expected move low, that takes away last week as being a possible higher low. So definitely want to pay attention to that. And it does look like market makers are saying we are going to go 2 down on the week, or there's a good possibility that we're going to go 2 down on the week, right? Market makers expect to move high 42.07 up here, coinciding with last month's 50% level, this green dash line. So you can see again why we have a lot of these levels on our charts. When they're lining up with each other, gives them a little bit more weight, right? Now, when we're looking at things from a trading perspective for tomorrow, just looking at the scalping perspective first, let's go ahead and bring up our chart, right? So we've got the market makers expected move high up here, market makers expected move low down here. Let me make sure it's the right color. There we go. All right, and the previous low a day right here at $38 flat, and previous high a day up here at 42.64, right? So those are our main 4-hour markers. Now, if let's do this. Let's say the overnight low is down here, right? And we'll say the overnight high. Let's make this an H for high, right? We don't know where they'll be tomorrow when the market opens, but we'll just make believe for now, right? So let's say overnight high, this light blue line here, light blue dash line here, around 39, $40, and then overnight lows down here at 36.75, right? What we want to look for, and this is our proven and repeatable strategy from a scalping perspective early in the morning, is we want to look for where price opens, right? So let's say price opens within Thursday's trading range, but just barely, right? Just above previous low a day. With that, we want to look for higher lows at or above opening print for calls and lower highs at or below opening prints for puts. Now, it's a little bit trickier here because if we do get price action to the downside, say we open here and we push down, say the previous low day, maybe we get a little bounce before we push back up and reject off of opening print and start to push down again. You want to go ahead and enter your puts, but previous low a day as a target is basically taken off the table, right? At that point, you're shooting for overnight low. Market makers expected to move low, and at that point, you would have to turn to our 4-hour and day triggers and targets that we'll get to here in a minute in our notes. So not as much magnitude to play with on the downside from the repeatable strategy perspective. But if we do get price action to the upside, say we open here, we push up to overnight high, and we get a little bit of a pullback, and we get a higher low at or above this opening print level, we want to go ahead and get into calls. Now, magnitude, if overnight high is here, isn't going to be that high for that target. So, you can take some off the board if you want to, depending on your entry, but the ultimate target in that for the upside would be this previous high day up here at 42.64. Now, that is above the market makers expected move high and last month's 50% level. So you don't want to, get too far ahead of yourself thinking that just because, we've got the higher low and we're above overnight high, we're going to get to that level. You just want to keep an eye on it and be ready to take your profits if we do get around this market makers expected move high in last month's 50% and start to turn down, right? All right, so that's what we've got from a scalping perspective. Let's look at more of a intraday, day trade perspective. Let's go to the 4-hour chart here. And again, we've got these downtrend lines. Now, again, we don't put too much weight in the downtrend lines themselves, but if they line up with horizontal lines when price action gets to those levels, that's when we put a little bit more weight into them, right? And have a little bit more confidence in our horizontal lines as well in that case, right? Now, if we're looking at the 4-hour chart, you can look at the 1-hour chart as well. The 1-hour chart is in a downtrend, so maybe you can get action to the upside going off of the 1-hour chart within this larger, 2-down candle that we got in the first 4-hour of Thursday. But, just from a 4-hour perspective, more of a full day trade, maybe a 4-hour trade. If we get the 2 up in the first 4-hour candle, that gives us a 2 down, 2 up reversal, right? So very clear trigger at the high of the second 4-hour candle from Thursday, and the magnitude for that move is the high of the candle to the left of that. So it would be getting right again to above market makers expected move high, just barely right at last week's 50%. But yesterday's or Thursday's high would be the magnitude for that move. That's a reversal. Again, 2 down, 2 up reversal. So very clear entry, very clear exit. Now to the downside, it's going to be a continuation. So we've got a very clear entry, but we have to just basically use our knowledge of the levels, to the prices that have been traded to the left of us and the levels that we have on our chart, and just see, as well as thinking about things like, how oversold are we, right? Are we a little oversold at this point? Do we need a little bit of a bounce up? Even if we get a little bit of a push down in the first 4 hour, how much would it be if we still need to get a little bit of a correction to, get things back right with the market? So, to the downside, we've got some pretty clear targets, but they don't have a whole lot of magnitude, right? So obviously last week's low, 3704, the market makers expected move low for Friday and for the week are right there. Last quarter's high is right here as well. We've also got the 61.8 fib of the bull flag from the April low. So I do see a lot of support in this area. But if we do, push down, especially if we push down immediately and then get some sideways action and then into the day, we could, fall out again, right? If people are at, halfway through the day, like, all right, no more risk on the table for me. Let's just take it off and we'll start again on Monday. You could see the market push down even further. But we do have the quarter flip and last month's low as another level of support here, right? Now looking at the day chart, let's get a little bit better chart here. All right, looking at the day chart, if we get price action to the upside, first of all, it's going to take a big push to get that, right? Because we closed down here more towards the bottom of the candle. We're down a little bit in after hours as well. So unless we get a good push in overnight, it's going to be hard to get the 2 up on the day itself. Again, we talked about the levels that we have to go through to get to the upside on the 4 hour chart. So if we do get to those and we do go 2 up on the day, right, then again, we've got the 2 down, 2 up reversal, but not a whole lot of magnitude on the table because of all the levels that we would have fought through to get to that point, as well as the levels of resistance that we have still sitting out here. So we've got the 100% fib extension of the bull flag from the April low and the week flip up here as well. So again, it would take a lot of work to get up here, and then to get to this point, that's a pretty big move from Thursday's close, right? This is what, $44.80, almost $45 from a close of 39. So that'd be a pretty big move, right? You can see the $4.49 move today was a 10% move. So to expect back-to-back 10% days, with SOXL, it wouldn't be too far-fetched, but you got to kind of keep things in check as well. So if we do get that action to the upside, don't get too far ahead of yourself, and make sure you've got time. Time is one of the best things you can give yourself, right? That and being at the money or even in the money, right? If you got time on your hands, you allow for a little bit for the move to take longer, right? If you are correct in the direction that the price action is going to go, it allows that movement to take longer than you would even like it to, but still continue to gain profit, right? And not, losing a whole bunch of a whole bunch of profit with theta decay, right? And that's another reason why we choose SOXL, because of the delta theta spread ratios that we get. All right, so that's what we've got from the intraday to day trade perspective. Let's go back and look at the notes real quick so we can just look at the numbers, right? So for Friday, November 14th, we'll have 31 trading days left in the year. The close price on Thursday on Thursday, November 13th was $39.22. And then we've got the flips, right? So we know we're red on the week, we're red on the month, and now we're getting close to flipping red on the quarter, right? So this green 49.49 obviously means we flip green at 49.49, and the week flips green at 45.06. But we're not close to doing that right now. We're closer to possibly flipping red on the quarter. So watch out for that, because if that happens, it's not too much further below that the year would flip red, and then we're looking at what was last month full time frame continuity to the upside, where the week, month, quarter, and year were green, to full time frame continuity to the downside, where we've got all of them red. And then it's more in the bear's control at that point, right? Then we've got the expected move that we talked about earlier, plus or minus $2.85, giving us a range of 42.07 to 36.77. And then, of course, we know where the gaps above and gaps below are. Now, the scalping chart, 5-minute time frame, we went over that early in the morning. You want to look for higher lows at or above opening print to get into calls, and you want to look for lower highs at or below opening print to get into puts. But when we start looking at things like the 4-hour chart, if we're going to go to the downside, that's again a two down continuation, triggers at 38 flat, and we've got targets of 37.04, 36.37, and 36.08. All right. Now to the upside, that would give us a 2 down, 2 up reversal, triggering at 39.33. The magnitude is 42.64, and in the face of a 1 hour, 4 hour, and 1 day downtrend, it could be hard to get there, right? So we went ahead and put some intermediate targets in the middle. So this, 40.53, 41.32, and 42.07, those are all levels where we could see some a price action reversal, right? Where we're pushing up and then hit one of these levels and push back down, or just neutralize, right? And that doesn't necessarily mean we have to pull back. We could just go sideways once we hit one of these levels. So again, it's kind of a big move in the face of a downtrend. So that's why we want to have these intermediate targets there. But ultimately, the target for that move would be 42.64, all right? And for the day chart, again, if we go to the downside, it's a continuation of 2 down, 2 down, again, triggering at 38, and it's going to have a lot of the same targets, except for we've got one more target to the downside, just because we'll have a full day's worth of movement and not just 4 hours worth of movement, right? Again, if we do go below this level, right, we're looking at the triggers and targets for the week, because at that point we will have triggered 2 down on the week, and that triggers a 2 up, 2 down, 2 up combo, 2 down. And which gives us a very clear entry and exit as well. So swinging back to the day, right? So we would have the 2 down, 2 down continuation to the downside. Many of the same targets as the 4 hour, but one more. And then if we go to the upside, that gives us a 2 down, 2 up reversal that triggers at 42.64. The magnitude is 44.63, which again, to get to 44.63 from where we closed at 39.22, that's a lot of resistance levels to have fought through. So that is the magnitude, and we've got it on the chart, but we do have an intermediate target of 43.62 on our way to that 44.63 magnitude. Now, if for some reason we get some catalyst that shoots us off like a rocket and we get above this 44.63 magnitude of the 2 down, 2 up, we've got an extended target of 45.06 as well. All right. So those are the triggers and targets for the scalping through, day trade, overnight swing type of trade. Now, we talk about overnight swing, but they would be over the weekend in this case. So you do want to keep an eye on that. If you do plan on swinging, make sure you got enough time on your contracts, right? Now, we won't go back to the charts for the week, month, quarter, and year. If you want to do that, you can just rewind the video. But we are an inside week as of right now. So we're getting closer to triggering 2 down. If we do get below 37.04, that is a 2 up, 2 down, 2 up combo, 2 down with a magnitude of 35.97. And if we reach that 35.97, that actually triggers a combo 2 up, combo 2 down, actually a series of them with these as their extended targets, right? I don't expect us to get there tomorrow, but just keep that in mind because it'll extend into next week as well. All right. Now, if we, by again some miraculous way, get some type of something to send us off in the upside direction, we've got to still get to 50.19 before we go 2 up on the week. So I don't think that's going to happen. If by some crazy way it does, we've got a magnitude of 51.91. So not a huge magnitude in terms of the trigger and target, but from where we are currently, that's huge. So I don't expect us to go 2 up on the week. I'm not saying we're going to go 2 down on the week either. I'm not calling for that. I don't predict things like that. We could easily just go sideways tomorrow or have a dead cat bounce tomorrow or something that prevents us from going 2 down, right? So me saying I don't think we're going to go 2 up on the week is not me saying we're going to go 2 down on the week, right? This is why we have triggers and targets to the upside and downside. I don't make predictions. I don't try and call it. All I do is respond according to price action, right? If it triggers, then I get in and I take it to the magnitude, right? The month, same type of thing. Inside month, We are a little bit closer to going 2 down than we are going 2 up. But again, I don't see us triggering either of those two on Friday, right? So maybe next week we trigger 2 down, but on Friday I don't think that's going to happen. So not a whole lot to say from the month perspective. The quarter perspective, the one thing I would say is we got to keep an eye on this 36.15 level. We go below that, and then we're no longer in force for the one combo 2 down, combo 2 up, right? So we want to stay above that level to keep that 70.08 magnitude on the table, right? Once we go below 36.15, not saying that this magnitude will be taken off the table, but at that point we really have to watch how the quarter closes before we can determine what's going to happen next. So 36.15 is the magic number for the quarter. Let's just try and stay above that. For the year, I would kind of throw it in the same bag as the quarter, right? As long as the quarter stays in good shape, then the year isn't going to be a doji. We stay more of that hammer candle structure for the year and giving us a better chance of going 2 down, 2 up in 2026. But not a whole lot to say from the year either. Things kind of neutralizing a little bit, but still overall bullish, right? Made that higher low on the year chart so far. Just trying to go 2 up next year to really lock that higher low in. So there you have it. Those are the triggers and targets for scalping all the way up through the 1 year chart. Hope everybody enjoyed it. We try and pack in as much information as possible without taking up too much of your time. So if you did enjoy it, go ahead and give us that thumbs up. It's free. Our channel's free. We don't ask for any memberships or donations or anything like that. So hopefully the free thumbs up is something that you can do to help our channel grow. All right. Anyways, hopefully we will have a good day of trading Friday, as far as like a momentum day and not get something that maybe we just get a little pop in the morning and move sideways through the rest of the day. But either way, we've got our triggers and targets for both directions. If we trigger both sides, we'll take both. But if you're watching this tonight, I hope you get some good rest. Wake up refreshed tomorrow. If you're watching this Friday morning, we hope you got some good rest last night and you're feeling refreshed this morning. And we look forward to getting out there and trading with you.